All right, welcome everyone to the deep dive. Today, we're really plunging into the crypto market. It's moving so fast.
It really is.
Got a whole stack of sources you shared. And our mission, like always, is to pull out those key nuggets, the important insights, basically give you that shortcut to knowing what's actually going on.
And it's a fascinating landscape right now. You've got these big market shifts happening, loads of tech innovation, and crucially, the regulatory side is constantly shifting too. It's quite the mix.
It is, yeah. And on those market shifts, I mean, the huge story this week has to be the institutional interest, doesn't it?
Yeah.
We saw, what, a record $2.3 billion flow into spot Bitcoin ETFs?
Just this week, yeah.
A record. And BlackRock's iShares Bitcoin Trust really leading that push. What does that really tell us? Is this just traditional finance chasing returns, or is it something deeper?
I think it signals something much deeper. It's not just opportunistic anymore. It suggests institutions are starting to see Bitcoin and maybe crypto more broadly as a legitimate asset class for the long haul, not just a quick trade. And you can connect that feeling, that market positivity, to the wider sentiment. Even the US SEC seems to be, well, hinting at a softer approach. They're talking clearer guidelines by late 2025.
Which must ease some nerves, I guess.
Definitely. It's calmed those fears about really harsh regulation, and you see market confidence going up. Look at X. Hashtag CryptoRally is trending, market cap up 12%, and retail investors seem pretty positive, like 68% positive chatter, mostly around Bitcoin and Cardano.
Okay, so the big money's coming in, regulations maybe easing up a bit. That paints a picture of acceptance. But what's actually powering this beyond just price? The tech must be key, right?
Absolutely. The underlying tech is crucial.
Yep.
Think about Ethereum Layer-2s like Arbitrum and Optimism. They've hit all-time highs in activity.
How are we talking?
Over 15 million transactions combined. That's a serious jump in salability, showing these networks can actually handle way more traffic.
Oh, okay. 15 million.
Yep.
And it's not just Ethereum, is it? Other ecosystems are growing too.
Exactly. Solana's DeFi scene, for instance, just crossed $10 billion in total value locked TVL. That's the money locked in their decentralized finance apps.
10 billion, that's substantial.
It is. And you've got new projects like Solend for lending, Orca for trading. They're building out real financial infrastructure there. Then there's Cardano, hit a big milestone with smart contracts.
Oh, yeah. What was that?
Deployed over 1,000 new smart contracts just this week. Seems tied to the anniversary of their Alonzo upgrade, the one that really enabled complex apps. And developers seem drawn to its energy efficiency, too.
Interesting. And what about NFTs? Everyone was wondering if they were just a fad, or are they showing signs of life again?
They really are, surprisingly, perhaps. The market's seen about a 30% jump in trading volume recently.
30%? Led by what?
Mostly gaming NFTs, actually. Things like Axie Infinity, Decentraland. Some analysts are even predicting a bit of a revival, maybe linked to metaverse projects gaining steam again. It's quite the turnaround.
Okay. So infrastructure's building, NFTs are maybe coming back. What about actual usage, day-to-day stuff?
Well, that brings us to stablecoins. We're seeing a global surge there. Tether, USDT, and USDC, they've reported something like a 20% jump in transaction volume.
And is that just traders or?
Not just traders. A lot of it is driven by emerging markets. Think India, Brazil. People are using them for cross-border payments, remittances. It's a way to bypass the older, sometimes slower banking systems. It's becoming quite significant.
But it can't all be positive news. There are always hurdles. The regulatory side still feels tricky.
It definitely is. Look at Binance. They just got hit with a 3.2 million fine from French regulators.
What for?
AML violations, anti-money laundering stuff. It just underscores that major exchanges are still navigating these really complex compliance landscapes. It's an ongoing challenge.
Right. The compliance piece is huge.
And looking even further out, there's a pretty significant concern on the horizon: quantum computing.
Ah, the quantum threat. I've heard about this.
Yeah, researchers are warning that by maybe 2030, quantum computers could potentially break current blockchain security, the cryptography we rely on.
Break it, like fundamentally.
Potentially, yes. So as a result, you're seeing many crypto projects already starting to work seriously on quantum-resistant algorithms, designing security for that future threat. It's becoming a priority.
Wow. Okay, so bringing it all together for you listening, we've touched on massive institutional investment, really explosive tech growth, those persistent regulatory hurdles, and now this looming quantum threat. It's a lot. A very dynamic picture.
It really is. And maybe this leaves us with an important question to think about. When you consider this mix, the rapid institutional embrace, the ongoing regulatory tug of war, and this shadow of quantum computing potentially changing everything, how might all these forces really reshape the digital economy that you interact with over the next, say, 5, 10 years?
Yeah, that's definitely something to ponder as this whole crypto world keeps evolving at lightning speed. We'll be back to dive deep again soon.